Hey there, welcome back to the South Florida Mortgage Reports. Billy May, your hat dude wearing mortgage guy. Always joined with our Capital Partners Mortgage President, Craig A. Garcia. Craig, how you doing this morning?
I'm doing wonderful, sir. I'm in here it's a beautiful morning in Orlando, Florida.
Nice.
My son is graduating today, so we're excited and it's a great day.
Fantastic. Hats off to him. It's an amazing accomplishment. And hats off to him and your family. That's awesome. Great news.
Thank you, thank you, thank you.
Very cool. Yeah. So as usual, we're going to kind of jump right in. We talk about mortgage rates, and this past week we had the Federal Reserve meeting every 6 weeks. We're going to talk about that and what that's going to have to do or influence on rates. Kind of talk a little bit specialty product a little bit, kind of a product update. And then we're going to also give you an update on the Florida property tax issue. We had Representative Chip Lamarck on a little while back, and that's moving forward in the state house, actually. So we'll talk about that. But first, let's launch into rates, Craig. The Freddie Mac survey came out, and rates kind of ticked up a little bit. The average is at 6.22 as opposed to 6.19 last week. That, average. There's a variety of factors influence that. And then we had a little bit of movement today, or actually this week. But the Fed moved this week. So what happened when the Fed spoke this week, Craig?
So the Fed decided to lower the federal funds rate 0.25%, which was widely expected. I think, right after the last cut, and it's funny because we talk a lot about the idea that it's not what the Fed does that usually makes rates move up or down, because there's usually a great expectation of what's going to happen. And usually the market doesn't wait. Rates don't wait, we like to say. And
Right.
so if the bond market believes that the Fed's going to be cutting rates, they will usually start pricing that in. And so you'll see rates come down in leading up to a meeting. And then if they do something that's expected, but then they say what they say ends up usually having more of an impact on what's going to happen to rates moving forward, because that shapes what the market believes that they're going to do next. So last meeting when they cut, before this, Powell came out, he was very negative about the idea of a December rate cut. He really made a point of saying, hey, listen, we've been driving in the rain. We can't see. We don't have the data reports because of the government shutdown.
That's right.
So there's no foregone conclusion that there's going to be a rate cut. He was like drilling it in, and the bond market didn't like it. And they didn't like the idea that he was being so negative about it.
Yeah.
This time, it was a very different tone that he had. So they cut the rates, but then he was, and it's funny, and you'll hear this term, hawkish or dovish, right? And
Yeah.
so, which I had to research, and hey, where does that come from? And it really came from military speak, and
That's
if
right.
you're a hawk, you were aggressive militarily. If you were a dove, obviously you were more into peace. And in the Federal Reserve, when they talk about the Fed, a hawkish Fed is, or so when someone's being hawkish, they are more concerned about inflation and tamping the economy down to avoid inflation. And if they're being dovish, they are being more concerned about the jobs market, not as worried about inflation. They're being more accommodating, which usually means lower rates. So his tone was more dovish this time than he had been in the past.
Right.
I think one of the things that he had said, he was asked, okay, so you're talking about pausing here and seeing what's going to happen with the data coming out. And do you think that the next move could be a hike? And he basically said, no, he goes, I really don't see that. And I don't think anybody's really seeing that. So the bond market, I think, did like that. I think it does. My opinion sets the stage for, hey, if we get an inflation report that's a little negative, I don't think anybody's going to, I think we're probably going to be a little less sensitive to that, more sensitive to the jobs market, which is, I think, what people could take away from the tone and the way he was talking after the press conference. So I think it's good for rates in the short term. And obviously, he did say, hey, leading up into January, there'll be a lot of data coming out, and and the data will drive the car. So we'll see.
No, you're right. We saw it firsthand because, earlier in the week, Monday, Tuesday, Wednesday leading up, mortgage rates were kind of trending slightly upwards. The bond market was moving. And then he announced this rate cut. And then we saw, we get repricing during the day. We see that. We saw some relief, and the market was reacting, in our favor that way as well. And that was on Wednesday. And all day yesterday, kind of the same thing. So interesting, like you said, usually when he announces the cuts, it's not good for mortgage rates, but this week was a little different. And it's interesting. That was like the polar opposite. It's like, it's not what you say, it's what you do. No, with him, it's not what you do, it's what you say. He's talking about what's going to happen in the future. So, and that's really what's influencing rates, which is Very interesting.
Similar to what happens with earnings reports when the publicly traded companies have their earnings report, the earnings can be better than expected, and the stock could still get worse because they give forward guidance, and the forward guidance they don't paint as rosy of a picture as people think. So it's about the expectations of what's going to happen next that really
Right.
more drives the rates than the action itself sometimes, unless the action's very unexpected. So
No.
yeah,
No, true. All good information. And we always preface it, with the average rate. Now, this is average rate now. We're talking about average rates.
sure,
Depending on a number of factors. Also, if it's a condominium, is it an investment property? How much are you putting down? Is the loan amount?
yeah,
A small loan amount, $100,000 loan amount. Sadly, your interest rate's going to be slightly higher. You're going to have to pay some discount points to get that kind of lower rate. There's
yeah.
a number of factors. Ballpark, we're kind of saying low to mid sixes is kind of a good number if you're out there. Pro partner, you're talking to your clients. I would say that low to mid sixes is kind of the number I would use. Providing great credits.
Yeah, but don't forget, you're a buyer and you're in this negotiation situation. You're still probably a market where you might be able to take advantage of negotiating some rate buy down. So you're definitely in striking distance of getting something in the fives on this purchase if you structure and negotiate your contract correctly, because it's still that kind of market, which is good if you're a buyer.
Oh, absolutely. You get 2-1 buy down, the temporary buy down, or get a permanent buy down. We've talked about that before as well. So, yeah, great information. So good stuff. So let's kind of segue next to the Florida level, onto the state level. You're in Orlando, closer to Tallahassee. So, we had Representative Lamarck on a couple weeks ago. We talked about, they were talking about the property tax, some relief for primary homeowners in Florida. Well, that got through the House now. They argued last week, and now they are going to officially be voting on something in January now. So now it is official. They're going to vote. There's 8 proposals, but it will, and it looks like it's going to get to the ballot eventually. And then with that said, yesterday, Governor DeSantis, who's been pushing for this, released his proposed budget for next year, and he's got $300 million set aside for rural communities that could be negatively affected by this issue. So this is back in the news again this week, the property tax issue.
Yeah. It'll be interesting. I certainly hope something gets done, and I hope that they figure out a way to winnow this down to some things, and there's not too many choices.
Right.
That when it hits the ballot, that there's because in order for whatever does get on the ballot, they got to pass by 60%. And it's a high number. And so if you have a bunch of choices, the idea that any one is going to garner the 60% pass rate, I don't know. It seems like it might go down. So hopefully we'll get some clarity on that moving forward. Yeah.
Well, then it's got to go to the House, and it's got through the state Senate, and the governor's got to approve it.
There's
more in the news about it. So, but it's interesting. It's still in the news, and so property tax relief would be great for everyone. Lastly, kind of product update. FHA came out and they're saying that they've raised the loan limits now. And I mean, what's the max loan limit in South Florida now, an FHA loan, Craig? What's up to like 670,000 in that ballpark, right?
You said 667 is going to be the new, Tri-County South Florida maximum FHA loan limit, which is a small increase. It's less than $13,000 increase over the year before. Yeah, this is different than Fannie Mae and Freddie Mac. When they raise their maximum loan limit, it's good across the nation. Right. But FHA, every county and every area has their own limit. And all those limits do not change by the same amount. So depending on where you're at, that loan limit changes. But for the Tri-County area, it's an increase of a little under 13,000, a little under 2% of an increase. But it is pretty wild. I mean, now, and you can't take advantage of these early like you can on the Fannie Mae ones. So the Fannie Mae, they raised their, Fannie Freddie, they raised their loan limit. We can start doing that right up today. But for the new limits for FHA, you do have to wait until your case number is assigned after January 1st. But once that's in place, you could really buy basically a $691,000 property and put just 3.5% down, get an FHA loan. Definitely don't have to have perfect credit. So that's it's a big number.
And on FHA, people forget, you can get seller concessions up to what? 10, right?
6%. Yeah.
So you can pay all your closing costs and even take a portion of it, do a rate buy down. You could definitely be in the mid fives or at least high fives on FHA. And FHA is way more flexible with credit stuff. So it's interesting. And you can buy, so you said $1,000 house for what? What's 3.5% of 700,000? I mean, it's not a whole lot
Yeah,
of
no,
money, really.
we've been doing more FHA loans. I mean, and one of the nice things about FHA is for some borrowers, there are certainly a segment. There's this perception sometimes that if you're getting an FHA loan, that you cannot get a conventional loan. And I would say that that is not always the case. I mean, sometimes it is, but FHA does not penalize borrowers as much at this higher loan to value if their credit score is not that great, and the PMI doesn't get changed based on the credit score. So you could be a conventional
Oh, yeah.
borrower putting 5% down, and you could get approved conventional, but because of
Right.
your credit score isn't awesome, now your rate is higher and your PMI can get really expensive. Whereas
Oh, yeah.
FHA is not going to, you basically get the same rate for the PMI, and then your interest rate's going to be better than a conventional loan. So you have people that choose to get the FHA loan. It's not necessarily just a loan of last resort for some borrowers because it's actually significantly more cost effective for them too. So it's
Absolutely.
a great tool.
Yeah, if you're below, I mean, generally speaking, I think if you're below about 720, you know what I mean? When you look side to side comparison, if you're a 719 credit score borrower, you'll get 3% down, Fannie, or 3.5% down FHA. FHA, generally speaking, is a better deal. If you're below even 700, that makes a huge difference. Like you said, the mortgage insurance factors. But the fact is, like you said, you could buy nearly a $700,000 house with 3.5% down. It's really interesting and more flexibility there. So, yeah. Well, let's go ahead and wrap things up. I know you got a busy day ahead of you, and but good stuff. And there's good news on the home front. I'm seeing more buyers. I'm getting some great feedback from my realtor partners. We're having a flurry of activity. Everybody wants to close by the end of the year, and we're slammed. I mean, we got a lot of stuff going on because people want to buy by the end of the year.
It seems like a normal, traditional end of the year. People trying to get their homestead exemption. Yeah, no, it's encouraging, and I think that it should bode well. I think for next year too. So yeah, no, it's exciting, and it's been a great beginning of the month so far, and hopefully it'll carry through.
Absolutely. So looking forward to a busy and successful holiday season. Listen, Craig, enjoy yourself up there in Orlando, and stay warm. I know it's a little cooler up there than it is down here, but hats off to you and your family once again. As always, we'll see you
at the closing table, sir.
All right. Sounds good. Have a great day.
Thanks, Bill. Bye.
Take care.